together. CERAweek 2023 starts now.
Good morning, everybody. I'm Daniel Yergin, chairman of the CERAweek conference, and I want to welcome you all to CERAweek 2023. It is going to be an extraordinary week. Obviously, this conference comes at a critical time when the balance of energy, security, and climate are front and center, and we hope that CERAweek will bring greater clarity and understanding to these great questions. The range and importance of these subjects to be addressed are really underlined by your participation, and I have to say it's unprecedented. We have 7,500 delegates, actually, from about 80 countries, and the presence of you all demonstrates the intensity of interest in the subjects we'll be talking about. Yes, the numbers are considerably greater than any previous CERAweek, so we have flexed arrangements to ensure that people who are not in this ballroom can also see the program, participate in the luncheons in the ballrooms on the fourth floor, as well as in the pre-function area. So I want to say greetings to you all, whether you're on the second floor of the Hilton of the Americas or on the fourth floor. Welcome to CERAweek. The team has worked very hard on the content to ensure that it's a meaningful week, and I think you'll see that unfold. And I certainly want to thank the partners who are such an important part of the program. We have over 1,000 speakers, and certainly our appreciation to all of them who are participating in sessions, whether it's here in the executive conference or across the bridge in the George R. Brown Conference Center in the Innovation Agora area. You know, last night I was looking through the program book, not on the app, but in the actual book. And as I looked at it, I was just so impressed by the range across the energy spectrum, from technology to markets to strategies to climate and emissions to government policies and geopolitics, and I would say, and much more. So this will add up to a great week of learning and meeting and sharing perspectives from around the world. And so, again, welcome to all of you to CERAweek 2023. To begin with, I would like to welcome our opening speaker, Mike Wirth, who's the chairman and CEO of Chevron. Mike? Well, Mike, that's a very enthusiastic welcome. So.
Well, I think it was applause for your opening remarks.
Okay. Yeah, they were so well crafted. Mike, we're really glad you're here. And as you travel around the world, as you know, the two words that you meet all the time are energy transition. You've been giving a lot of thought as to how to think about energy transition, and I'd like to just ask you to share your thinking on it.
Well, you know, the world uses an enormous amount of energy today, right? It's what makes life possible, makes life better in developed countries than in some parts of the world that are still developing. And so affordable energy, reliable energy, and ever cleaner energy are essential to the quality of life and the advancement of human progress. I think the issue of how we best move toward a lower carbon energy system is one that is getting reframed as we get some real experience with the challenges of pushing some of these new technologies forward, the realities that affordability and energy security actually do matter. And so I think the discussion is moving to a more balanced state. I hope it is, because I think that's going to be very important.
You've used the word orderly to describe the transition.
Yeah, so there's a term that many of you have probably heard where people talk about a just transition. This, a few years ago was in the vernacular, but that's a somewhat undefined term. What's just in one person's mind is different than what is just in another. So it was very much kind of through the eyes of the beholder. I think what I try to use is a different term. I talk about an orderly transition, which means markets remain supplied, economies remain competitive, energy remains affordable for consumers. And we have to be cognizant of the fact that as we go through the changes that people expect to see, a disorderly transition could be painful, and it could be chaotic, and we could lose support for the progress that so many want to make if the chaos overwhelms the perceived benefit.
That's partly what we saw in 2022.
Certainly we saw, I think, in Europe, the beginning of perhaps, some experience in this regard. We've seen it in California, in my home state, where at times the grid is stretched to the point where reliable energy supply becomes an issue. And so I think, we're very early into building a new energy system. The world runs on, Patrick Pouyanné talks about this very eloquently, runs on System A, which is what we have today. And the world would like to go to System B, which is maybe 1 or 2% built. And so you have to be careful about turning System A off prematurely and depending upon a system that doesn't yet exist, that hasn't been scaled and proven at the conditions that are needed to provide the energy supply that the world.
So between System A and System B, you have your low carbon strategies, which are System A leading to System B. What are you doing on low carbon strategies in your
Sure. So Chevron's approach is to leverage our strengths to, continue to deliver lower carbon energy to a growing world. And so what does that mean? We intend to grow energy supplies, both traditional energy and new energy, because demand for both continues to grow. We intend to reduce the carbon intensity of the energy that we've historically produced and continue to produce, and to build new energy solutions. We've got a focus on renewable fuels, hydrogen, carbon capture and storage, offset some emerging technologies like geothermal, things that leverage the strengths that our company brings to the table. We're not a big player in wind or solar because we don't have unique capabilities that would say we can compete with others. They're very good. There are companies represented at this conference that are outstanding at wind and solar. We are not. And we would flatter ourselves, but I think we could go into those sectors and compete with them.
You just did this big acquisition in biofuels.
We did. Last year we acquired Renewable Energy Group, who is one of the leading biofuels producers in the U.S. and, in fact, in the world. We're now the second largest producer of bio-based diesels in the United States. It's been a great combination. They have tremendous capability in the feedstock side of the business. We have deep competence in traditional feedstocks, petroleum-based feedstocks. We don't know much about used cooking oil, distillers corn oil, various bean oils. They have tremendous technical expertise, commercial expertise, relationships, market savvy, and we've got a big marketing position in it, so we can combine those to have a very powerful business.
Right. So, as you know, there's this recent piece of legislation called the IRA that's passed in this country. Have you guys figured out yet what it means for your business?
Well, it's, big legislation in the U.S. tends to be a lot of, it's a big grab bag of a lot of things, many of them energy-related, many of them not. And it all gets implemented through enabling regulation, which goes through various agencies. And so oftentimes, until the regulations have actually been crafted, you don't really know how these things will work. We're seeing a little bit of this play out as Europe has expressed some concerns about certain aspects of the legislation that would incentivize investment in the U.S. in the electric vehicle value chain, for instance. Certain credits don't get fully utilized unless there's certain amounts of domestic content, which are impractical today, but perhaps in the future. So the rules by which these things actually come into into the market are still being crafted, and so it's a little hard to say. I mean, broadly, it's pretty clear that there's an intent here to drive costs down on some of the new technologies, which is good. They need to become more cost competitive. There's a variety of means to do this. I think one of the watch-fors is historically governments haven't been great at innovation and predicting markets. Markets are better at sorting winners and losers than governments are. And so by definition, in a bill like this, there are certain technologies that are given certain incentives. We'll have to see over time if they compete in a marketplace where ultimately they need unfettered access to capital as opposed to supported access to capital. But look, it's going to move some things in a good direction, and I think we'll evaluate where we participate in that as we know more.
Well, let's turn to the ongoing business and start with the Permian, of course, and just what the growth strategy is there, and whether inflation, shortage of people is affecting your plans.
Yeah, so just for folks in the room that might not know, a decade ago, we probably produced less than 100,000 barrels a day in the Permian. Last year, we're over 700,000 barrels a day, and on our way to 1 million barrels a day by 2025. We are seeing, ongoing learning. It's a great big area. The geography or the geology is not homogeneous, so we learn every year. We get more effective. I mean, versus 5 years ago, we're drilling twice as many feet per day as we were. We're fracking twice as many stages as we were, and so the productivity continues to advance. The technology continues to advance. Inflation is a real issue. Supply chains are tight. Access to both equipment and people is challenging, but we're progressing our plan. The other thing that's important is some of the lowest carbon oil and gas production in the world. Our production there is 13 kilograms of CO2 per BOE, which is less than half our portfolio average, which is less than half of the global average. So this is good for the country, not only from a security standpoint. It's a low carbon source of energy to meet demand today.
Right. Another area that you've become more active in is the Rockies. And when we were talking about two-way learning between acquired companies and acquiree.
Yeah, so our position in the DJ Basin in eastern Colorado came to us with the acquisition of Noble Energy in 2020. And one of the things that we learned is they were doing a lot of things, particularly in this area of methane control and greenhouse gas emissions control, that was more advanced than what we had been doing. And so there have been a lot of great learnings. They've electrified virtually all of their drilling, all of their facilities. They've got tankless operations, so there's no venting, there's no flaring, and really clever engineering design and strong operational performance, which has benefited our business in areas well beyond just the Colorado.
And that wasn't obvious before the.
No, I mean, you value a company based on certain business fundamentals, strategic fit, asset quality. What we've learned over the years through many of these deals is oftentimes the greatest value comes in the people, and they've got some tremendous people that have joined our company now, and in the things that you learn. Large organizations sometimes think they have everything figured out, and it's great to bring in an infusion.
They don't.
Okay. Large companies don't. Large organizations like government agencies sometimes don't. And so we can all learn, and we all need to continue to learn, and that was one of the great benefits of that transaction.
So let me ask you about two international geographies. One, you've been very committed and really a pioneer in Kazakhstan, and I know we have the Kazakh minister here and others from Kazakhstan. You've been at it 10 years in terms of expansion. How does it look to you now?
Yeah, Kazakhstan's been a terrific country for us to work in. We went in right after the fall of the Soviet Union. Kazakhstan became an independent republic. We were the first large American investor in the country and have helped develop their energy system to the benefit of the country. And certainly it's been good for our company. It was an old Soviet oil field that was producing, I want to say, around 50,000 barrels a day at the time. It's about 700,000 barrels of oil equivalent today. We've got a project underway to take that to around 1 million a day. Really needed today because a lot of it goes straight into Europe. It's very close to Europe. And so the expansion project has moved really out of the construction phase into commissioning and startup. It's a large kind of two-component project, which will take a good part of this year and next year to get all the facilities online and commissioned and field transitions and turnarounds done. But we can see the finish line, and it's at a time when the world needs more of that supply in Europe, and particularly does.
The other area, I mean, when acquiring Noble, you acquired not only Rockies, but you acquired the Eastern Mediterranean, their Israeli gas, and that really wasn't much on the map before, but now it is.
It is. I mean, it's a beautiful gas resource. It's helped decarbonize Israel's power grid, which was 100% coal-fired a decade ago and is now somewhere between 70 and 80% natural gas-fired. Air quality is better. Greenhouse gas emissions are much lower. And gas is being exported to neighboring countries, Jordan, Egypt, and we're working on potential expansions that could allow us to get gas into Europe as well. We've had some additional discoveries. Discovery recently offshore Egypt, some more exploration acreage offshore Egypt, and we have a discovery offshore Cyprus. So that entire region is very prospective, and we're very optimistic.
5 or 6 years ago, it wouldn't have been seen as prospective at all.
No, it was relatively underexplored, and I think it's an area that holds great promise. Obviously, exploration carries with it risk, but we've got good operating assets today, and are cautiously optimistic that we'll see more of that in the future.
So that is a new focus for you all.
Sure, we're expanding the Tamar field with a project that was sanctioned last year. We're working on the Leviathan field on a couple of different concepts that would help us liquefy gas so that we can get it to markets like Europe. They have, various strengths and weaknesses, the different concepts, so we're working towards narrowing that by the end of this year.
Could you say a little more about that? Because obviously, a year and a half ago, it wouldn't have been as a high priority for Europe as it is now. Just how you see that developing, the Eastern Med as a source for Europe.
Well, clearly, Europe's over-reliance on Russian gas is something that is very clear today, and I think the Europeans don't intend to go back to that. So they'll accelerate some of their efforts on renewables, but the reality is, as you do that, you start to realize that baseload power is very important. There's been a lot of import infrastructure built and more on the way to balance out the growth in renewables with baseload combined cycle gas power generation. And the U.S. is going to play a big role in that, given the U.S. export capacity that exists today and will be built. And then the Eastern Med is closer and should be part of that equation as well.
So is it too soon to figure out how that gas will get to Europe in volume?
Well, for us, there's probably three options. One is a pipeline that's been long discussed, involves many countries, billions of dollars of capital, very complex. And I don't want to say it will never happen, but it is probably the most complex proposal. Second option would be to use existing facilities in Egypt that are built, that have some capacity. We're not a partner in those facilities, so you've got some commercial negotiations. You also have two countries involved that have to sort out export policies. The third option would be floating LNG in the Mediterranean, not far from the platform. Simpler because you'd work with the existing partners on the project and one government rather than two. More capital and a little more time to get that done. And so we're really evaluating the details of each of those alternatives before we choose one.
So as you think about it, does the Eastern Mediterranean become a major gas province?
It certainly is a significant gas province today. I'm not sure the threshold between that and major, but it's an important one. I think it's one that will grow, and we intend to help make that happen.
Right. So we were talking about, obviously, a year ago when we met, it was just after the war began. It's a year later. I think at the time, no one would have thought the war would continue and be continuing. As you look at it in terms of the impact on the energy markets, the gas market, you started talking about that, and the oil market, just how does it look to you today? And looking out, insofar as one can look out over the year.
Well, these things are difficult to predict with certainty far into the future. But gas markets, I think, are structurally changed for the longest. We've had now the Nord Stream pipeline's been attacked. Even if there was a desire to see it flow, it can't. And as I said, I don't think Europe intends to go back to their degree of reliance on Russian gas. So gas markets are changed globally. You're going to have Europe competing with Asia for LNG. The U.S. is a big exporter and likely will grow. And I think that changes trade flows, it changes pricing mechanisms, it changes project economics globally for the foreseeable future. Oil markets are still playing out, and Russian oil is still flowing into the world at a different price structure, into different markets than it was prior to the war, but it's still flowing. Now, if that changes, or if the growth in demand outstrips growth in supply, I think oil markets are impacted for a period of time, but perhaps not quite as structurally as gas markets are. And then, refineries and refined product was also a concern. We saw a lot of closures during COVID and the delay of projects that were under construction. Certainly, those projects have begun to move forward again now, and I think we're going to see refined product markets probably come back to some sort of more balanced equilibrium the quickest of the three.
So we're now just about almost exactly a month since Europe put its ban on Russian oil products. How disrupted do the markets seem? Are they adjusting?
It's pretty early to actually sort this out. Europe built large inventories ahead of the ban going into effect, and so it had a buffer. We're seeing now the effects of this as you start to see the trade flows, but this had been well telegraphed by the G7, the U.S., and the EU. So people were able to prepare for it. I think 6 months from now, as ships have had to make more than one voyage, we're going to the products travel in smaller parcels, longer distances now, and the capacity of the system to make these movements sustainable will be tested. What I would say on both oil and products that concerns me is we've introduced new rigidities into these systems. Normally, the energy markets are one great big just-in-time delivery machine. Demand grows slowly, production grows slowly, but the numbers are very large. There's not a lot of swing capacity. There's not a lot of inventory capacity. There's a little bit, and the system normally optimizes within those parameters, but there's now a lot of constraints. You can't sell to this country. You can't buy from that country. You can't insure a ship. You can't sell at this price. We've got new ships coming into the fleet to move some of the products, and the potential for an unexpected event. If you remember the Abqaiq attack in 2019, which markets kind of yawned off pretty quickly. An unexpected event today could create a different kind of
because it is
a
tighter
response.
I remember that people were quite surprised and didn't realize just how global the market was, that the U.S. was importing 600,000 or 700,000 barrels a day of Russian product, and it was just part of a global market, and that kind of flow just isn't there.
Venezuelan crude's coming back in. There's a lot of moving pieces here, but the market's tight, and the logistics system is being stretched in ways that it normally isn't.
Right. So maybe just ask you a couple more questions. You've talked in your strategy as a company that you don't try and call the cycles, you invest through the cycles. What does invest through the cycles mean?
Well, we're in a commodity business, and it's a cyclical business, and it has lows, and we saw the lowest of the lows in 2020. It has highs. We saw some highs last year, but if you go back over time, maybe read one of 3 books written by somebody on the stage here, you see that this is a story that repeats itself. Sometimes the nuances change a little bit, but in a cyclical business, you can't call the peaks, you can't call the valleys. You need to stay strong through the cycle, and that means for us a strong balance sheet, a consistent approach to capital investment to meet growing demand, consistent shareholder distributions in order to make sure that our shareholders are rewarded for their investment in our company. But you can't size the company for the peaks, and if you only size it for the valleys, you miss some opportunity as well. So you have to really try to navigate through the ups and the downs.
So you did mention, what did you say, shareholder distributions, I think otherwise known as buybacks. I think you've taken a little heat on buybacks, and just maybe explain your reaction to the heat.
Yeah, so distributions also come in the form of dividends,
yes, dividends
which people rely on. And Dan, we have 4 financial priorities and have long stayed consistent with these. The first is to sustain and grow our dividend. We've grown our per-share dividend payout for 36 years in a row. Reinvest capital to bring new supplies to market. As I said, we're investing in both traditional and new energies. Our budget's up 30% this year versus last year, and so we'll bring more supplies to market as a result of that.
That's a big increase.
It's a big increase.
Yes.
The third is a strong balance sheet to buffer you through these cycles. And then when we have cash beyond what's required for those first 3 needs, it's the shareholders' cash. And we try to return it through share repurchases. We try to do these through the cycle, so you don't just time and buy when prices are high, but you buy through the cycle. But the cash goes back into the economy. We can either stack it up on our balance sheet, or you return it to investors who then take it and allocate it into the economy for more investment and growth. And that's really what our practice has been.
Right. And how do you feel about the heat?
Look, we're a stronger company than we were a few years ago, so the numbers are bigger than they were, but the pattern and the behavior is no different. I mean, we live in a capitalist economy, and this is how
it is true. I mean, it goes
work.
on all the time, but it's just at a certain time.
Some things get more scrutiny at certain points in time than other points in time.
So, Mike, as a final question, big complex industry all over the world. As you look out at the industry and what's involved in your own company, what do you find most interesting, most exciting as you think about the future?
Well, look, I couldn't be more excited about the future, Dan. We sit at the center of one of the great challenges of all time, and that is, how do we meet the energy demands for not just the 8 billion people that occupy the planet today, but the 10 billion people that will occupy the planet 20 years from now? How do we do that in a way that's sustainable, in a way that's lower carbon, and that doesn't have market disruptions and dislocations, as we were talking about earlier? This is an industry that solves the toughest challenges. I sometimes tell our people, when they talk about difficult things, I say, look, this industry does difficult every day. We're in the deep water. We're in extreme environments. We do things with engineering, with project management, with operations that very few companies or industries in the world can even dream of doing. And so this is this great challenge. We've got an industry full of brilliant people, engineers, scientists, and inventors, and the solutions will come from innovation in technology, from ingenuity in business models, and from the power of capital markets to scale that to solve these big problems. And there's never been a more exciting time to do that than today.
Well, thank you. And thank you very much, Mike Wirth, for helping us start CERAweek 2023.
You're welcome.
Thank you. Thank you.
Please remain seated. The program will continue momentarily.